Okay, we have a great video today for you. It's all about retiring early with covered calls and stock options. Okay, I can say from experience, this is a reality. You can retire early by trading stock options. And if you are already retired, you can make such a nice amount of cash coming into you every month by simply learning to trade your retirement portfolio. Okay, so I retired, I'm going to call it retired, at the age of 46. Okay. I am not retired, however, because I like to work. I like to have something to do every day. And so I prefer the term that I am work optional. So that is the new buzzword out there. I am work optional at 46 years old. I'm now 47, and I learned to trade options just 8 years ago. So it happened very quickly for me, and it can happen quickly for you too. So the trick is that you have to be sitting on some savings. Okay, you have to have a certain amount of money to get started with this and be successful with it in order to grow that money so that it is significant enough to retire you early or create a work optional environment for you and a lifestyle for you. But once I learned how to trade stock options, I was able to have a really low risk, consistent way to create income for myself that didn't involve having a job. It only involved me and a computer and sometimes even my phone to trade stock options with. I do this all without any high risk strategies and without being glued to a screen. So I only trade like an hour a day, believe it or not. So if you're interested in this, pay attention, because in this video, I'm going to show you exactly how I became work optional or retired and how you can do it too by mastering just 4 areas of the covered call. We're going to start with the covered call. And if you get really good at those, we can graduate you into something else where you can retire even faster. So yes, you can retire sooner than you ever imagined, but there's also other opportunities that can come your way because you learn how to trade stock options. Have you ever thought about just working part-time, taking half of your salary, or finding another position where stock options can supplement your income? There's so many things that you can do with having an income from stock options that are really mind-blowing. But yes, you can retire sooner than you ever imagined. Also, if you are already retired, you can do so much more with the money that you do have by trading stock options than just letting your money sit there in your account and taking money out at the 4% rule. There's a better way. So let me share what we'll cover in this video. The first thing is how I pick the right stocks that give me the safest, most consistent income. Okay, so if we want to retire and we want to think about retiring, we have to have a way to generate a stable income without working anymore, right? That's the whole point. So stock picks will allow you to do that. Okay, your options trading is only ever going to be as good as your stock picks. Okay, that is just a fact. Okay, number 2, how I manage my emotions so I avoid making big mistakes. Number 3, how I use different covered call variations to multiply my returns or get different types of returns. How I manage my risk so I never have to worry about losing it all. Like, I'm not worried about losing all my money, guys. And you don't have to either. And number 5, how much do I really make doing this? It's a good question, right? So like, how much do I really make? Also, how much do you need to make? You need to consider that, okay? So the main thing that we can go over for main point number 1 is how I pick this right stocks that give me the safest, most consistent income. So I always focus on fundamentally strong, medium volatility, high option interest stocks like Apple, JP Morgan, and Costco, okay? So I'm really looking for industry dominators here and monopolies. And when we talk about like, am I worried that all my money is just going to disappear? No, because I don't think Apple as a company is going to disappear. I don't think it's going to be worth half of what it was today in a year either. I also believe the same thing to be true about Amazon. If you agree with those types of statements and that those companies are probably only going to get more valuable over the next 5 to 10 years, then your money is pretty safe being invested in those things. I feel like mine is anyway, and I've been doing this for 8 years and it's proven to be true, and I've only gotten richer in the meantime, okay? If the stock is safe, stable, and reliable, the income that you get from covered calls becomes consistent and the downside risk is reduced just naturally from trading the best stocks. So you won't ever really need to mess around with these high flyer stocks because there's no point in doing so because they subject your account to more risks, okay? Volatile or weak stocks can tank, wiping out months of income. So sometimes those high flyer stocks are very attractive to want to trade. Tesla might be one of them. It goes on these rips, but then it pulls right back, right? And if you're trading stock options in this way, that's sort of like the lazy way or the theta-based way that I do, and that is so consistent for retirement income, you're going to want to avoid those types of stocks because they only create worry and subject your account to risk. So I look for large cap stocks with strong fundamentals. There is a whole series on my YouTube called Investing for Financial Freedom, and you can find the formula on how I look for strong fundamentals there. I favor options that have tight bid-ask spreads and have high levels of open interest on the options chain. One of the great things about trading monopolies and the biggest companies is you don't even have to really look to see if there's high open interest in those stocks because they are the most traded stocks on the market. So they naturally have high open interest. So you kind of take that work out of it by choosing stocks like Apple, JP Morgan, Amazon, Costco, Microsoft, any of the Mag 7 really, because there's already so much natural open interest in those shares and those options. I also avoid speculative stocks or companies without long-term viability. Okay, so I am not really a fan of putting a bunch of my money into trading a new company like something like Hims. Okay, I understand that company has been on a tear, but it also is subject to a lot of pullbacks. And those types of pullbacks make my options income inconsistent, which I don't want. Being that I want these funds for retirement, like I don't want to live like high on the hog one month and then have to live like a pauper the next month because my options account is varying so much. So staying in stocks that stay pretty consistent and consistent trending upwards keeps me out of that like shortage, that like bipolar thing that's going on in some of those stocks that are newer to the market. Okay, so I personally screen for a strong brand and a competitive moat. So I want this company that I'm investing in to hardly have any competition out there. And when I think about a company like Amazon or Apple, it's really hard for anybody else to compete with them. Therefore, I'm really interested in investing in that company and in trading that company. I also look for a stable uptrend. So I am looking for these stocks to be an upward trend for 10 years, 5 years, 1 year, 6 months, etc. 3 months right now would also be appropriate. Okay, so the stocks have to be going up and have to have shown themselves to go up over an extended period of time for me to be at all interested in it. Why is that? That is because the company has been able to consistently grow throughout a 10-year period of time. They've proven they've done it. So that just shows me they probably have the know-how to keep doing that. Okay. So I don't really look for what companies say they can do because that's a projection into the future. I look at what they've already done. And that speaks volumes to me. That is money. Okay. I look for high institutional ownership as well because the only entity that can really increase stock price over time are institutions. Okay, so retail traders like you and me, we don't influence stock price at all. If I buy 200 shares of something, it's like not even a blip on the map to the stock price. However, institutions buy millions or hundreds of thousands of shares all at once, and they raise and lower the stock price when they buy and sell. So when you see that a company has 65% more institutional ownership in it, that stock will trade in a more reliable way. And it shows that the people that really know a lot about companies are invested in that company, which is a very positive sign. I also look for a history of bouncing back after dips. Okay, so we had a dip in April. And a lot of people freak out when we have a dip like that because they're thinking, oh my gosh, my portfolio is down. I don't like it either, okay? But I will say there is a silver lining in the clouds there because what I do is when the market starts to retrace and things go up, I look for what is retracing fastest and most consistently. And then I realize that guess what? Who is doing that? The institutions are buying into that stock after a dip. Usually a dip is caused by something in the world changing, okay? So most recently it was tariffs, this conversation about tariffs. There are winners and losers that come out of a tariff conversation. And institutions will change their mind on what they would like to put money into based on the changing world conditions. In this case, in the tariff conversation, certain stocks emerged as clear winners from that situation, and certain stocks just didn't benefit and come back as strongly. I paid attention to that, and I use that as information as to which stocks to trade going into the future until the next dip happens, okay? So dips are actually kind of magical. They will reveal a lot to you if you are paying attention. So all I'm saying is pay attention. Okay, so I want you to know that there is some work involved in making your initial stock list. Like, it's not going to be something that you can do in 5 minutes, but I mean, you can, sort of, but you want to definitely check out the fundamentals on these stocks and do my investing for financial freedom sort of research on them before you start options trading them. You're going to be required to see if the charts are up for 5 years, 1 year, and 3 months. You're going to check the fundamentals of that stock as far as like, are the earnings and the profits up year over year for 4 years in a row, excuse me. Is that stock a monopoly, and does it pay a dividend? And there's other little checkpoints that you can do to make sure that that stock is a solid thing to be options trading with. Okay, so it might take you, several half-hour segments of time to work on this stock list that you're going to come up with as far as the stocks that you might like to trade with. But I will tell you this, once the work is done and you have that list, that stock list isn't going to change very often, okay? So a little upfront work will get you years of results pouring in, okay? And you can definitely tune into my YouTube channel where I do stock reviews and I tell you exactly what I think about some of these stocks, and you can add stocks onto your watch list or remove them based on what you see there, okay? So again, it takes a little work to get started, but stocks that are really, really hot and are consistent and have been earners over a long period of time, they don't change very often, okay? So I could think of one that recently changed this year, and it was United Healthcare, right? Because they had a bunch of fraud in the company and lots of bad news. And that used to be a killer stock. But, if you are paying attention to the market at all, or if you had a UNH in your portfolio and saw this major dip, if you weren't paying attention too much, you could have easily looked up as to why that was. And you could have easily decided for yourself, should I be invested in this stock or not? Is it a winner or a loser going forward? Most of the data that came out on UNH at that point in time made me no longer interested in that stock because I thought the problems were just going to continue and continue. And so I took it off my watch list. But what you see here happening is that had been on my watch list for something like 8 years. It was doing well for that long, okay? It stopped doing well, so I removed it. But think how long it stayed on there, a pretty long time. There's other stocks that have been on there since, Apple's been on my list for something like 20 years, okay? So this doesn't take a lot of maintenance once you have it set up. Okay, so the next thing is like, if you're going to trade for a living or a supplemental income, you have to know how to manage your emotions to avoid big mistakes. You guys, I have to be honest, I don't really have a problem with this anymore. I've been trading for 8 years pretty consistently, and I'm like, up day I make money, down day I make money, okay? And once you become a really good options trader, that's what will happen to you first. But I have to admit the up days are way more fun than the down days. But your emotions, when you start trading, it took me 2 years to really get a handle on my emotions. 2 years, okay? It takes other people longer. It takes other people no time at all. It just depends on who you are. So you have to understand who you are as an emotional person and have some emotional intelligence and really look for information and materials to keep, and podcasts and that kind of stuff, to keep your mindset in the right frame of mind, because you have to be an open-minded and you have to be a positive person to trade options. People that think that the world is, or the market is headed in an overall bad direction, shouldn't be trading options. It's just not what they should do, because they will make terrible decisions on when to sell and when to buy, okay? So you have to be an optimistic person overall. So emotions will try to convince you to panic sell, overtrade, or chase premium. Emotions will also make you greedy. Greedy is a big one. Okay, so the opposite of being so excited when the market goes up, it's not the opposite. It goes hand in hand with this. You can tend to get greedy and overconfident, and then you overtrade. Okay, so not all the emotions that you're going to come across seem like they are bad emotions. Like when greed is rearing its head at you, it feels very positive until it goes wrong, and then it feels bad. So you have to be very cognizant of where you are in your emotional pattern and what influences you and what you need to overcome. So how I have done this is that I make rules around my trading and then I stick to my rule. So the first rule is make a rule. The second rule is stick to the rule. Okay. So I'll tell you some rules that I've made over the years. Okay. So you want to predefine your rules for entering and exiting positions. This is super important. Actually, one of my traders is looking into trading full-time. He's going to quit his job in a month and he's going to be trading full-time. And he asked me, what is one of the biggest mistakes that you made? And I was like, you know what? One of the biggest mistakes that I've ever made is not cutting a stock out of my portfolio that was performing badly. And I held it on for too long because I thought I could keep up with selling covered calls and make up for the declining stock price. And I just waited way too long to sell those shares. So what did I do with that information? What did I come away with? I didn't come away with a terrible feeling. Okay. Been at this too long, like I said. So experience does help. I came away with, I need to make a new rule. I need to make a rule that I am going to sell at a predetermined period in time if something happens in that stock price so that I'm not making emotional decisions or talking myself out of it as we move along in time. Because postponing decision making is something that we do very naturally as human beings. So I'll just deal with this tomorrow, or maybe it will get better. Okay, maybe it will. But we should have clear cutoff points, okay? We should have boundaries. So I made up the rule for myself that I will sell a stock if the stock is declining over a 3-month period of time when the market is remaining the same or going up. If that stock is going down and everything else is going up or staying the same, that's a loser. I'm done. I gotta sell out of stock. I have to at least reduce my position by 50% at minimum. Okay, so that's my new rule. So guess what that's gonna do? That's going to keep me out of making an emotional decision later when I'm in the heat of the moment, maybe, or just like, I don't know, it's almost like these little tears at the stock price. They happen over time and you're like, it's only down $2. It's only down $2 more. And then before you know it, it's down $20 a share and you're like, God, this is bad. Okay. So I'm just trying to stop myself in the future from making bad decisions by making the decisions when I'm not emotional, making them on a day I'm very rational and writing them down and memorizing them and being like, this is my rule. I'm reviewing my portfolio on a quarterly basis and I'm going over these shares and I'm seeing what makes the grade and what doesn't. And then you're just ruthless. You just kick the baddies out of bed. All right. So I also keep a trading journal to reflect and learn. So you have to do this. You have to see which strategies are working for you, which strategies aren't. You have to see how much money are you making on covered calls versus credit spreads. You have to see how much money are you making on one stock versus another stock. And what's your allocation there? And is that appropriate? Okay. So you have to keep a trading journal to reflect and learn. You cannot look at your overall profit and loss on your brokerage account and think that it is reality because it's not. You can't look at your overall gain on your brokerage account because it won't be accurate either. So, you have to keep your own journal. You just have to. Also, don't check prices all day on these stocks. Check your positions on a set schedule. Okay. So I'm really a fan of, I wake up in the morning and I love the market. So I check to see where futures are immediately when I wake up. Based on that, I know whether I have to come in and trade that day or not in the morning. Okay. If stock prices didn't really move that much, I don't even check in on anything, guys. I don't. I'm just like, okay, I'm good. I already have positions up. Something needs to happen for me to do anything more. Then I come back at like noon or 2 o'clock and I'm like, anything change? And if it did, I make a move. So AM and PM is plenty. There's no reason you need to watch your stocks more than that. Okay. You also need to accept trade-offs. So you are sometimes going to miss out on upside to sleep well at night. You are sometimes going to cap your upside to sleep well at night. There's all sorts of things. You need to be able to mitigate risk so that you can rest easy and you can enjoy your life. So there are going to be trade-offs to trading, which means there's going to be FOMO involved sometimes where you're going to say, I shouldn't have sold that today because it went up $10 more. But what you have to do is you always have to pat yourself on the back when you do make money, because positive encouragement goes a long way, and small base hits are far more reliable and consistent than hitting a home run here and there. I know we are on social media a lot and we see these people with these amazing trades and we're like, oh my God, like, why am I not able to do that? You probably will do that at some point or another. But I think what's not occurring to a lot of people is that these things are quite rare in a trader's life. So while you can see over the flood of 10,000 people on a social media feed, 10 people who really made a home run and that sticks with you, they're not doing that every day. Nobody's doing that every day. Okay. So you also need to practice non-attachment to the outcome. You need to think in long-term income and not short-term wins. You could also just be excited about short-term small wins because everything adds up and that will compound over time. Okay. Also, practice makes perfect. And the more experience you get with the market swings, the better you'll get at managing your emotions. So again, I told you, I was sort of very attached to the emotional side of trading for 2 years. And then after 2 years, I was like, I know this system works. And so why am I getting all bent out of shape about this or all elated? Like, it shouldn't be a surprise what's happening when the market goes up. It's not a surprise when it goes down. So why am I letting this run my emotions? Like, if I come home at the end of the day, I'm already at home because I work from home and I trade from home. But if I go hang out with my kids and I'm in a little bit of a snotty mood because I didn't really like what the market handed me that day, that's not a great way to be, right? That's not a good way to live your life. So you can't let the market run your emotions. It's just a terrible idea. Okay, and then I also think you have to accept that the process of learning mindset management is going to take time. You're not going to be able to change your mind just immediately. You're not going to be able to manage your emotions just immediately. Like, will take some time and some practice and some experience. So give yourself grace as you're learning this. But definitely take the time to reflect on how you're doing and how you're feeling. Okay, the third thing that I have to do is I use different covered call variations to multiply my returns. So a lot of people just do a covered call and they're like, I'm doing a covered call and I'm selling a 20 delta and blah, blah, blah. Well, there's so many different ways to do the covered call. So I adapt my 4 different strategies that I like to trade with on different conditions and goals that I have. So if there's if the market's really bullish, I'm going to adjust the style of covered calls that I'm doing versus the market being bearish. Okay. If I know a bearish month is coming or I know a bullish month is coming, I'm also going to adjust that. Okay. So that is what I'm doing there. Different strategies give you more flexibility, more income when you want it, more upside in your portfolio growing when markets are strong, and more protection when they're shaky. So you really kind of have to know how to manage this. And if you don't know how to manage this, obviously, guys, I am here. I teach a course. You can email me, erica@abundantlyerica.com, and I can introduce you to what I do, and I can teach you how to trade these strategies. They're so effective, and we've retired quite a few people and made them work optional. So most traders make the mistake of just blindly, following one type of covered call, and they become a one-trick pony. And really what ends up happening is they'll think they're really geniuses while the market's bullish or something like that. And then a bear market comes and they don't really know how to adjust. And all of a sudden what they thought was reliable is no longer reliable. So the more strategies that you know here with the covered call, the more powerful that you become. So the 4 strategies that I use are what I call, these are all names I made up, the fast money trade. This is one of my favorites. It's selling at the money calls on volatile days for quick premium. It doesn't even have to be a volatile day, but boy, I do love selling them on volatile days to take advantage of implied IV crush later. The earnings trade. Now you're probably thinking, how can you make a lot of money selling earnings covered calls? Because I have a stock portfolio where my holdings have earnings, I have earnings every month in my portfolio. So I love getting paid for just out of the money covered calls on earnings day and getting paid by volatility. It's just an amazing life hack. And those call premiums that you can get on that day are like 40%, 30% higher than any other day of the week. So it's pretty awesome. I've got the get paid going up a strategy, which is rolling calls upwards in bull markets and really trying to get maximum cap gains and grow my portfolio. That is very similar to the 20 delta covered call that many people know about. then I have the buy low and sell high covered call strategies, which is where I buy the shares on a low day and then I sell calls on a high day. So this one takes a little bit of patience, but it's a winner. And I also remember to do nothing. Okay. So I allocate about 50% of my shares in my 401k to conservative covered calls, where I'm selling maybe a 10 delta, maybe a 5 delta, something like that. And I also leave a bunch of shares just completely no calls on them so that if we get a major push up in the market, I don't miss out on that upside. Okay. So don't underestimate just making amazing stock picks and letting your runners run. P.S. July, amazing month to let things run. Okay. And then the fourth thing that I think you really have to manage to be able to retire earlier or become work optional with options is that you have to manage your risks to make sure that you're not going to lose your portfolio. So how you're going to do that to begin with, guys, I said at the very beginning of this video is make great stock picks. That's your first line of defense. Make stock picks that like, you know, the world cannot live without this company. Survive, live the current lifestyle we live. Okay. Super important. Okay. Risk management though is what makes covered calls and options trading sustainable. So I always focus on preserving capital while still generating returns. So how am I preserving my capital? I'm making really freaking great stock picks. Okay. That's number one. Okay. Number two is that I am then selling covered calls on the stock picks that I have to take in more revenue. Okay. To buy more shares so that I can become more richer. And that's what happens. So it doesn't matter how much money you make on options trading if you blow up your account on like 1 or 2 bad trades. Okay. So risk management and knowing how to manage risk equals longevity, which equals freedom. And I think that's why you guys want to retire earlier for watching this, is you don't actually want to retire. You want freedom. Like if you could work a job that was getting paid to do whatever you love to do, you would want to work that job. You would. I think of a guy that's a snorkeling. He runs snorkeling tours and he freaking loves his job. He loves goofing around with the people all day. He likes looking at girls in bikinis and he loves like being out in the ocean. So he has his dream job. He makes an income doing it. He has conversations all day and he loves his job. The reason that you want to retire early is not because you want to retire. You just want freedom. How are you going to get freedom? It is from being able to understand risk management and get longevity out of your portfolio. Okay. So here are some tips on how I do this. So I never go all in on one stock or trade. Never. I also don't trade like 30 stocks either. Okay, guys. So I am like only probably trading about 8 stocks and invested in maybe 12. Okay. But they're all super high quality. Okay. I diversify across different sectors and assets. Okay. So yeah, I'm like in tech, I'm in retail, I'm in some restaurant stuff with like Chipotle. So you have to kind of diversify your portfolio, but you've also got to look for the top stocks in those areas. Okay. I invest in monopolies or industry dominators with 90% of my portfolio. People are often asking, do you invest in anything speculative? Yes, I do, but with only 10%. Okay. And a lot of times that takes a lot of discipline too, because a lot of times the stocks that are more speculative that I will buy with 10% really take off and I want to put more money in them. But I have to remember that's greed talking to me and it's not very sensible. And so I should probably just stick with the 10%. Okay. So rules, I made rules, right? And I follow the rules. I also learned about allocation and what is right for my taste level and risk. And so when we talk about options trading and we talk about making an income from options trading, what you're going to need to consider that nobody really on YouTube is considering, and I'm here to say is very important, is your allocation of your options trading portfolio. Okay. That should be based on volatility in the stocks. Okay. That's what it should be based on. If you don't mind your portfolio going up or down, and that doesn't make you feel sick to your stomach and you just want to make premium income, go invest in a bunch of volatile stocks. Okay, cool. Or trade in volatile stocks. If you don't like that feeling, that sinking feeling of it going up and down like a roller coaster, you're going to want to invest in more or trade in more conservative stocks like Waste Management or Walmart and things like that. If you got a medium appetite, it's going to be like Amazon and Apple. Okay. So you got to think this through, and you got to mix and match, because you might not be like all conservative or all high risk. You kind of got to mix and match there. So if you want my help with figuring that out, there's also other videos on YouTube, and one of them is this consideration on allocation. Super boring title, but you guys should check it out. Okay. Also, know what types of trades to do and not do around earnings. Okay. I love trading earnings, and I've got some killer strategies, but some of you shouldn't be trading earnings at all because you don't know what the hell you're doing. So if you don't know what you're doing, stay away from earnings. This means you have to know when earnings is happening, guys, because earnings can sneak up on you. So don't trade covered calls if you don't know when earnings are, because you don't want your covered call to maybe go over earnings if you want to keep those shares or something like that. So you should know when the earnings dates are, and you should be looking ahead at those time periods if you're going to do any options trading at all. Earnings will kind of like put a major kink in the rope in the hose if you're not paying attention. You also want to set realistic expectations and aim for consistency and not lottery wins. Base hits on repeat score, base hits repeated score more points than the occasional home run. Okay. And you also just want to track your downside protection. So you're going to want to do the math with your tracking on what your break-even price is, which is equal to your stock cost and the premium minus the premium received. So you're going to kind of want to do that math and figure out where you are, okay, with how much money that you are actually making from options trading. So how successful is this? How successful is doing covered calls and working this system that I have in my Millionaire Mentorship Program? Okay, and how am I really retired? Am I really retiring people? Yes. Okay, yes, absolutely. In my 550K 401k, I put 104k, sorry guys, account, I make $7,500 to $10,000 a month on covered call and dividend income. It's impressive. Okay, I don't touch that money. That money is just there growing. Okay, because I invest in other shares or in other options. Okay. This account didn't start at 550K, guys. I haven't deposited a cent since it was 210K. So it's grown that much in a very short period of time. It is what it is. Okay. The results speak for themselves. And my brokerage accounts, they also total around 550K, and I make $30,000 to $40,000 per month, sometimes more, trading options. I trade covered calls and some advanced strategies that you can learn in the Millionaire Mentorship Program. Okay. On my 1.1 million accounts combined, I make $37,000 to $55,000 per month. That's kind of mind blowing. I actually need about $30,000 a month to live. I am an expensive person to maintain, apparently. I want you to know also, I didn't start with $1.1 million. I grew that with options. Again, my 401k has doubled because of options. One of my accounts started at 100K and it's now worth 300 4 years later. So this works. It does work. There are moments it's challenging when the market pulls back. There are moments that seem questionable when the market pulls back. But long term, this does work. Okay? So I guess what you need to know is, how much money do you need to make to retire early? Okay? I know I need 30. And when I hit that, I wanted to make sure I was super consistent with it before I became work optional. Okay? So for that number is different for everybody. What will allow you to retire early or become work optional is going to be your portfolio size and then how consistent you can get with options. If you want to become consistent with options, you probably need a mentor or a coach. Okay? And that is me. I'm happy to help you with this. We have an amazing track record of getting people work optional within a short period of time. A lot of them were already traders that just needed to fine tune their trading a little bit here and there, and it made all the difference. And there are people who have known nothing at all who have come to be proficient within a year and a half. Okay. And a year and a half is not that long, guys, to retire early to get that payoff. So anyway, if you are interested in my help with learning options trading or how to make this a reality for yourself, there is a link down there in the description to book a meeting. Please do so. I would love to see you inside.